I can talk to myself. It's not not unusual, to be fair. So let's just cruise through the first few minutes and see how we go. I'm sure there'll be people joining us very, very shortly. I'll just make sure that we are streaming. That's the main concern. And it looks like we are. Okay, all good. So, happy Thursday, everybody. It's nice to be talking to myself at the moment. I hope you've had a wonderful week so far. And those of you watching this as a recording, obviously you will be up to date with what I'm about to show you. For those who aren't watching this as a recording and aren't in the room, obviously you'll miss out. I'm sure you'll catch up. Righto, let's start by sharing the gold trade, which was, of course, is, of course, the new breakout system that we are trying to crack. And I only started this on Monday and haven't placed an order since. The trade that I did place on Monday, which is the one that we're going to continue with for, until it's proven wrong, is still in the market. And as you can see, is 10 pips to the good and just about a break even. There was the entry from Monday, or that one there actually, and we've just cruised inside a range ever since. Broke out briefly, then came back to the bottom. We didn't get taken out there, very, very close to it. And now we are on, as I said, g'day, Paul P. You and me, buddy. That's we're the only two here. That's all good. And I'm just explaining what's happened to the new breakout trade, which I placed on Monday, which is still in the market. Look, this is at the mercy, quite frankly, of what happens with the CPI figures coming out in a few hours' time in the States. So could be good, could be bad. We just don't know. Tuesday's trade range would have been here to about here somewhere. So that would have actually been a winner. You would have got out at whatever the DR 2, 3, whatever it was, whatever it hit. So that would have been good. Yesterday, the 9 o'clock bar is that one. So your range would have been here to here. You would have been taken in, and that would have been a loser. So one up, one down, one pending, as it turns out at the moment for this new system. As I say, that one at break even. Will we trade today? Well, why not? We need to get a few results on the board. The low of the range today, actually, I'll get rid of Mondays. Probably a good idea. Low of the range today will be not there, but there. That's the open of, actually, no, it's not. That one is. Times have changed. That's the open. Really? I better check that. Things have changed since the new year. I haven't checked, sorry. Normally it's the third candle, which is the open of Tokyo, but we only use the second. And the high is pretty clear at that level there, which is a bit of a double top. So what we seek to do is trade the breakout of that, this being the entry, that being the stop loss for the long. It's an OCO, so one cancels the other. This being the entry for the short, this being the stop loss. Now I'm going to have to open a new chart to do that because this other one's still going. And I can't do it on two. There we go. Now, those of you who use the Trade Manager can actually play this. I think I can do this on the what's it called? Can't remember what it's called. Traders Toolkit, that's right. So if I bring that in, press OK. No, I can't do it. I think I proved this the other day, didn't I? We can only do one candle as an entry and stop loss. Let me see. New order, 0.05. Entry shift would be, so this only gives me one option. I can't do two entries. So how does that work? I see I can only use a bar, right? I can't use a range. Got it. Okay, that's a pain in the backside. But anyway, I won't go through this because this just takes forever, guys, on the trade manager. Get rid of that. And I'll just give you the levels, right? The levels for the range are low 1875.81, 1875.81 is the short entry and the long stop loss. And the high is that one, I think. 1885, let's call it. 1885 is the long. So that will be the entry for the long, 1885. Stop loss for the long will be 1875.81 and vice versa. So whichever one gets triggered, that's the way we'll go. I'll set it up when Ash comes in, when I've got time to do it. It's a little bit laborious, to be honest, on the trade manager. Okay, let's leave that for now and go have a look, see exactly what has transpired from my perspective for the week. I placed an order on pound yen on Monday, a long order. Placed it here. And as soon as I saw this candle come off its high without reaching TP1, I immediately moved my stop loss to entry, put that in the Telegram group, so anybody in the Telegram group would have known that. And we just did nothing for 2 days, didn't take out the high of the first day, and now we've come back below entry. So at this point, taking my stop loss to entry was a good decision. And as I say, that's only at this point. We'll see how that pans out. I'll keep my eye on it, but I'd probably need to see this come to here and give me the higher low now. But I'm out of that, as I said, when stop loss to break even. Now, I've also placed 2 other trades. One was CAD Swiss. CAD Swiss, you'll recall, was my chart of the week, if it would set up, and it was a game changer bar to the high side. All I've got to do is get that chart open. Why wouldn't it? There it is. There it is now. Okay, so we're going to trade this bar here on Monday, and we did that. Was it Monday? Tuesday, was it? Monday. So on Tuesday morning, I placed that order long above that bar. And my first take profit was here. And I was going to move stops to entry, do nothing else. Don't take any money off the table, because I believe that we could get up to this level, and I wanted to get a maximum result out of that. Now, didn't trigger on Tuesday. In fact, we got an inside bar Tuesday. Yesterday, was it yesterday? Yeah. Yesterday, I couldn't be anywhere near the charts. I was absolutely out all day. So that order expired, and I would have placed a second order had that been the case, or had I been in front of the charts, or had I been anywhere near the charts, and that would have obviously gone very, very well. Now, I'm pretty gutted that I'm not in this, but I'm not, and a pullback now required for me to do so. I'm hopeful that this top of what is really, Ash will tell me what this is. What the hell is this, Ash? It's a reverse triangle or something. It's a chart pattern, but what is it?
Looks like it's a type of broadening pattern, isn't it? I tell you what I see there, mate. Actually, no, I don't. I was going to say it's like a inverted head and shoulders with a sloping right shoulder, but that double bottom negates that. Um, it's like a weird broadening pattern, isn't it? But with that bottom thing, I don't know what you'd call that. Do you know? Somebody asked me what a shape was yesterday, and it was a trapezium, and I'd totally forgotten what
Oh
they
yeah.
look like. So
Oh, they're sexy.
yeah. So yeah, some of the. I mean, this one I don't think I've ever labelled this type of chart pattern. I've never labelled it.
Yeah, I'm going to call it a reverse something or other. It'll come to me. Anyway, what I was playing was the double bottom, and this being the potential to be the first higher low. Sorry, I'm as I said, I'm absolutely gutted that I'm not in it, but I'd love to see it come back here and give me a genuine second higher low, so I can get in. But yeah, just couldn't be in front of the chart, so it is what it is. You can't be everywhere at all times.
You picked a good one though, mate. I mean, the Swissy was, from what I've seen, the weakest currency so far this week,
Yeah,
and
yeah, it's having a shocker.
it's having a shocker. You picked a really good one there.
Yeah, but I'm not in.
You're not in,
That's the
but
issue.
no, yeah. But
But
as you say,
if
that
it
there's a
if it
chance.
does reverse, there'll be an opportunity for sure.
Yeah, I mean, there's some quite amazing price action this week. I've got a trade in the market just now. I don't know whether we want to share this trade, but it's if
Yeah,
I don't
do
know,
it.
is it
Yeah.
well, I've gone for a little counter trend move, and I'm just going for this Nasdaq short. Stops would be at the highs if and I will come out there. It's not like I'm not putting stops in at this particular stage, because I'm looking for this to go higher, even though it wouldn't trouble me too much, because if it doesn't reverse here, then I'll be looking at these higher levels, and I have got the chance to stay in this trade because it's just a little bit of a bite. But I'm just looking for just a little bit of a move back down to the daily pivot, as we have that CPI data out. So it's just effectively trading what I would gather would be a bit of profit taking before the CPI data
Yeah.
comes out, because as you can see on the longer term timeframes, and I always say this to people, you're never really trading the time frame that you trigger on. You're trading the longer term time frames all the time, and I'm actually trading this daily. But there is a little bit of a potential trigger on the shorter term time frame
I
when
love
you
the
go to
fact that, sorry, if you go back to that chart, I
yeah.
love the fact that the three amigos played out beautifully and went to support level, and now
Yeah.
you're retesting that breakout of those three
Yes.
amigos.
Yes,
Interesting.
absolutely. And the thing is with this stuff is that um oftentimes, more often than not, the area that it's come from does get initially rejected. So if we were to sort of have a look right the way along here, even here, even as this market is now moving to the upside, this was the area it came from, and as it came up there, it did reject it initially.
Mm-hmm.
So more often than not, this area will be rejected. So it's a valid kind of a valid price, and when thinking about strategy, my strategy really is always based on the support and resistance levels that I see. It's not really a kind of chart pattern per se. It's a price pattern
Yeah.
for me. So when they do return to these price points, then I tend to try and get in regardless of what the indicators tell me. I mean, yes, I needed to see a pause, and that's really what happened along here. So we got something of a lower low here. So just looking to trade that area again. Looking at what would be a double top in this small little pattern here is why I got into the trade. But yeah,
Makes sense, right?
yeah, it does to me, mate. And the other thing, of course, which plays a part for me is trying to assume what the psychology of the market may well be, And when we've had a run like this to the upside off the back of PMIs, and we have a CPI print today, which would suggest that there could be just a little bit of horseplay going on, potentially a little bit of toing and froing, it would suggest that there would be some resistance and some profit taking at a resistance level. Yes, it might not be this one, and it might be this one, but this really, because it is in coincidence, if you like, with a CPI print, it makes the most sense to try and, you know, take a little bite here and see if it does reverse. So that's all I'm playing here, mate. The European markets continue to astonish, really. I mean, look at the FTSE. It's just the thing about the FTSE is that we are now sort of taking out levels, you know, where the Nasdaq has been coming down, the US market has been coming down. The FTSE's taken out, though. This is the pre-COVID high, taking that particular area out. And again, you'd expect some sort of retracement at this point. FTSE's opened up relatively solid. You know, it's fairly calm and relatively solid. Nothing huge going on right now. Some of the bigger companies are all pretty much under the 1% mark, but you know, would there be some profit taking here on the FTSE as well? Probably. You know, you'd probably anticipate that. So but the market which has astonished me the most, and I'll get to this now and I'll pass it back to you, is copper. You know, I looked at this copper chart and look at this on the daily, and what we have is this channel. We have this really lovely channel kind of going on, and you know, when we're sort of talking about levels that tend to get rejected the first time round, not so, just kind of straight through the level on copper, and I can't see really. I mean, I suppose no, I don't see any other way to kind of draw this channel that would, you know, to kind of give me anything much cleaner. It does suggest to me that it's that the channel's been taken out, and now we're potentially returning to this point to possibly even take off again. This would be of interest to you, though, wouldn't it, mate? If this ends up coming through this area and then coming back to this level down here, if this bar ends up kind of looking like that, then I guess we'd be looking for a potential trade to the downside if it does something like that, and then we've got a potential false break. But
yep.
I think the most surprising aspect is that what's happened is the market has not only started to pour doubt onto Jerome Powell's sentiment, you know, what Jerome Powell and the Fed are effectively stating. They're also saying recession. Are you kidding me? We haven't got a recession on the cards, because these are recessionary what's the word? Reactive products. You know, copper is a growth product, and what we've seen is just a not only a takeoff of copper, but as I say, a takeoff and a push through a significant level. And as I say, it doesn't really matter where you draw this level; it's through. You know, this point is through this point.
That horizontal level there, near the left of your chart, has that got any history?
Oh, let's have a look. Let's put it in and check it out. And I might just switch down to a weekly. Yeah.
Oh, hell yeah.
I mean, I suppose this is the one, isn't it?
Yeah, it's a bit higher, isn't it? Yeah.
It's a bit higher, which actually sort of puts us to where we are now. But that looks like the one, just because we've got a relatively clean sort of closing touch here and a relatively clean closing touch here. These, well, in fact, they are clean, but these points are a little bit more scruffy. So you might struggle to find exactly where the level is, but it looks like it's at this particular point, and the way the market's reacting. Close.
Interesting, that that's exactly the same as the FTSE as well, in that you got three amigos that told you where the market was going to break, and it did, and now we're back at that level again.
Yeah, exactly, mate. Exactly. So yeah, some of these charts are interesting, and I tell you, of course, the dollar is fascinating right now as well. You look at the way the dollar is reacting. Aussie down, you know. Today, you know, we can see the gap down. Dollar up against the CAD so far today. We can see it pausing against the pound. You know, this is where it gets quite interesting when you kind of go through the charts against the dollar. big move up against the Swissy, and as I say, it looks like the Swissy was the weakest currency this week. Down against the Kiwi, but this is the one I find the most interesting. Down against the yen. I was looking for Kiwi yen as my trade of the week because of what the data suggested, and actually, this is on the dailies, and you can see, it did have a pretty good run to the upside initially this week, but now look where we are. I mean, I would suspect
there's actually a lot of that taking place on the currencies, and I'll show you that when I do my analysis.
Yeah, well, I think this is the point I'm making, is that it's very difficult to almost pick the correct market, right now. Look at silver. I find this one also really, really interesting, and if there's dollar strength today, the silver's the one I'm going to be going for some downside.
Yeah, we both like that on Monday too. Yeah.
Yeah, and what I saw yesterday with silver was a move under the monthly pivot, but then when you draw this trend line in, this trend line also starts to suggest, and I don't know exactly where it is. It's probably around about here somewhere, but this trend line starts to kind of suggest. I'm going to put it on the close. This trend line starts to suggest that we're probably around about at the point where it could start to reverse. But this is a short-term trend to the upside, so nothing really for me until we start to move really back under this daily pivot. That's what I'd be looking for with silver. It's got to now break this pattern down and suggest that we are actually going to be moving lower. There's the rising wedge as well, which does tend to be bearish, and right on top of it, mate, on the rising wedge. So do we come down and get a measured move on this? Well, if it's coming down, then there's going to be a measured move, probably, and some, depending on why it comes down, I suppose. But how great is that CPI print? Does the CPI print come in hotter than expected, push the dollar up and everything else down? Does it also, and this is the reason that I'd go for silver, does it also then suggest that the recession is potentially going to take a firmer grip, which could push these industrial metals lower, copper and silver with it? But copper I probably wouldn't trade right now. But we looked at silver, as you say, and silver's just a bit more interesting because of where it is. Not so keen with silver if you look on the futures, because the futures actually suggest that it hasn't reached some of these trend line levels. But if you look on the actual cash trade, it looks like silver might well be at a resistance point. So silver I'm watching out for, mate. I'm taking a short-term trade with a NASDAQ, see what happens there. But quite a few I think could be of interest after the CPI print, and it's possible that there's going to be nothing related to the dollar, because if there is potential for that if that CPI print actually comes in weaker. So these are the two ways I'm playing it. Silver really interesting for some downside for me. If the CPI print actually comes in and it's weaker than expected, I'm back to that Kiwi yen, because I probably wouldn't. I don't see too much with the dollar that's of huge interest. Dollar upside, dollar downside. Of huge interest, because I don't like how far some of these markets have come.
Same.
It would push the euro higher, but I don't like where the euro sits. It would push the dollar yen lower, but again, I'm not really that keen on the yen, so I would probably flip and not go for a dollar product, but go for a product which actually does intimate growth and over risk off, if you like. So I'll be back to this chart here, but again, this has got some work to do. If I'm looking at this on the 15, this would have to get above these levels really before I start to look at the Kiwi yen for some upside. But it was the currency pair of the week, so I'll keep an eye on it, mate, and see if there's an opportunity there at some point.
Cool. I before you started talking about the indices, and they really have been the story of the week for me, the indices and not the currencies, because the currencies have, as you pointed out, tended to go in the direction that they were pointing previously, yet have sucked straight back off those levels, which is kind of weird. And this, I guess, in a week that's got a major news event, first major news event, I guess, of our trading year anyway, you would expect that there's going to be indecision leading up to that. And certainly I think we've seen that in the currencies, but we haven't seen that in the indices.
Yeah.
To my mind, the indices have just been, one direction.
Yes, they have, and you know the one thing about like the Nasdaq that I would say, even though obviously I'm looking for downside, but I think the one thing that you could say about the Nasdaq, which could promote some upside, is that it's still probably relatively good value here because of how far down it's come. What I find surprising about the euro is that there has been no profit taken, even though we have a significant number.
Yeah, I'm stunned, to be fair.
I mean, I suppose it depends on where you look. You know, I suppose you could say the euro is still good value if you're looking at the really, the longer term picture here. But I'm surprised there hasn't been something of a relief moved back down again, because it's got a long way to go before it tests that support level. I just don't know what's going to drive it down. It's possible that that CPI print does. If that comes in hot, these market, if it comes in really hyper hot, I mean, I don't know if it'll do that, but if it comes in hyper hot, these markets are going to move and probably move relatively quickly. But because there's so much room to the downside, I don't think it will move quick enough for us not to get an opportunity.
Maybe I'm a little bit sad that I'm not short these things at the moment, in particular euro dollar, because of that level you pointed out, and maybe it's a little bit higher than that, is absolutely juicy as far as I can tell, and we are at a strong resistance level.
Yeah,
and
we do. Yeah, look.
The dollar index has stuck below that support level, I guess, which would point in the opposite direction, but everything relies on what's going to happen with this figure.
Yeah,
certainly,
it does.
Certainly short term, but I wish I were in the market short euro dollar at the moment and free trading. That would be really, really cool.
Yeah.
Because I think that's the one that's going to suffer most, in my opinion.
Yeah.
If, as you say, that number is in favour of the dollar.
There just looks to be a at this stage there's just no break of the downside. Obviously, this suggested that we could get it, but just a huge kind of move back up again over the last week. But that does also, eventually these markets just become just a little bit tired, and the exhaustion aspect does kind of like step in, and there's so much room, mate. I mean, it's the monthly pivot and the weekly pivot, in conjunction down here, look like an obvious target for the next couple of days, and CPI comes in hotter than expected, then you'd be looking for the euro to at least push down to this point. And I think depending on how wide that spread is between expectation and the number will determine how low the euro will eventually go, or maybe even how high it goes. If it's the other way, then maybe we get another push in the euro. But I'm completely with you. I think it's a basket case of an area right now.
If you go back 1 week, erase what happened after NFP and the services PMI.
Yeah.
So if that doesn't exist, right, from there, you've got a double top and a lower high.
Yeah.
And a lower low.
Yeah.
So that was poised to reverse.
Yeah.
And the news interrupted that. So and the way I think is, if that emotive move off both of those numbers has any room for reversal, here's where it's going to do that. But again, this is going to be CPI driven in the short term.
It is.
But my thought process is that emotive move will be erased. And I'm actually hoping for a neutral number on the CPI so that I can actually get into this move short, because I think this move short is going to be substantial.
Yeah. Well, you might well be right, and I suppose that's what brings me to the silver chart as the most attractive proposition for me, because those PMI numbers were weak, and the reason that we saw some upside in everything against the dollar, except for silver actually, was because we're starting to see the recessionary concerns. That compounds the problem for silver. If we've got those recessionary issues suggesting that industrial metals, which again, the copper thing just surprises me so much because of that. But it compounds the issue because those industrial metals have got, you know, a double-edged problem if they've got CPI prints coming coming up hot, suggesting that we get a stronger dollar, and we've got weakness in the market stepping in with those PMIs. Then silver looks to me like the trade of the day, and maybe of the week. I don't know, but we'll see what happens. Again, got a long way to come down to really test some of these horizontal levels. $22 to the downside, and it's currently at 23.70. So you know, we're looking at potentially a 10% move, near enough, you know, in and around sort of 7 to 10% move to the downside, which is pretty substantial. In fact, it's very substantial. It would depend on sort of how fast that happens to determine how substantial the trade actually is. But yeah, the silver's the one front and center for me.
Yep. I'm certainly not against you. Euro dollar will be the one for me, I think, but silver, yeah, not far behind. And that previous chart you were on, was that the 4-hour chart, the daily? I haven't had a look at silver today.
Oh yeah, it was the 4-hour. Yeah.
Yeah, even that looks nice at the moment, the 4-hour chart to me.
Yeah, it does.
Is that the one? Yeah, that's no, that's the one. Yeah. So if you were to take your trend line and take it back to the lower low in the middle of the screen, that one, yeah.
Yeah. Potentially a false break as we go, and then we're down again. And yeah, I mean, I suppose you'd be going under this bar here, wouldn't you?
Absolutely, you bet.
Yeah.
Liking that.
Yeah.
If you bring the start up to where you've got the third dot on that trend line now, yeah, to there. Bring the start up to there.
Yeah. And do this.
There's a bit of a lag. I can't see what you're doing yet. Yes.
Yeah.
That's one of my lovely little candle patterns sitting there.
Yeah, and I guess the other thing is, if it does take out the low of this bar, then, you know, depending on which trend line you're actually looking at, it would actually satisfy both.
Yep.
You know, satisfies that move there, and it also satisfies this this support line as well. So there is certainly a case to be made there.
Yep, and it's always same for me. If it goes there, it's probably going to go lower. If it doesn't go there, and the current candle continues, then who cares? Doesn't matter. So that's my thought process. What I'm also looking at there is the need for a big retracement on that junk move. I mean, it went up really, really fast, and then it's like, you know, a city landscape at the end of the day. And something's got to give there. So to me, it's going to be downside.
Yeah, it looks that way. And if not here, then here. Because I suppose the other thing is, you know, we're still a few weeks away from what the next potential announcement from what the Fed are going to do. We're still a few weeks away from that, and there could well be some. Obviously, it's going to be number dependent, but it could be some horseplay kind of going on while we wait for the next interest rate announcement in February. So some upside, then maybe some profit taking. You know, there's a few different permutations, because this is an inverted head and shoulders as well. You know, it's quite complex. The way that the actual the chart is formed, but it looks like this is the left shoulder over here, while this is the whole head here, and we could be sort of like seeing, you know, something of a sloping up right shoulder here. So I don't know what that would look like on a weekly. Probably not quite as clear. Yeah, it's not so clear because the left shoulder and the right shoulder are so much smaller than the head, which would suggest on the weekly that this is a possible left shoulder and this is the head, which could take a little while longer for this this area to form. So we might start to see a bit of price action which messes about in these areas. But yeah, silver chart looks good, mate. Gold as well. I mean, gold is it has been on a tear and has not given any opportunity to get in really. Yeah, one I saw one, which was this one here.
Yeah.
That was the only bar, and you know, after we were kind of through this point here, it gave us that that move off that bar. Also a left shoulder, sorry, a right shoulder that's starting to move to the upside. But that's the only thing that you could say about gold. That's the only point you could say for gold, which was a decent point to get in. Yes, you could have got in on the neckline, break of the neckline here. But you'd want it to come back. You know, if you're going to sort of like try and get into this market, you'd want it to come back. But yeah, just some surprising moves in my opinion, from what we've seen so far. Incredibly confident market over the last few sessions, and no current indications of any respite. As I say,
maybe it's because they've just come out of the gates running in the new year. I don't know.
Yeah, I think there's a lot to do with that, mate. I think you're right. You know, January does tend to sort of, you know, shape things up in this way. You know, if you go back to the previous January, then there would have been. I mean, look at this. This is
nothing but net.
January.
It's all up.
That's the start of the year there. I mean,
it was February before it started. Okay, interesting.
February before the real run started. But if you go back to sort of like some of these, this is really what I'm talking about when I'm talking about the moves. Nasdaq, look at that, bang, straight down in January. FTSE very, very messy. The DAX, though, would have been another one that really started its rundown. It started to shape the move for the year. And that does tend to be sort of like, you know, relatively significant. What happens in January can sort of shape the whole year. That this 1 month can shape the whole year. So I guess a bit of jostling going on. If you're thinking about the Nasdaq, it's at a significant point. You know, we've seen really a triple bottom down here, and market participants attempting to push this up. Those that were calling for lower, me being one of them, hasn't seen the price point that they really would get interested in buying up the Nasdaq as yet. Does it happen in January? You know, do we start to see this January just start to fade away and suggest that at least the first half of the year, this year, is going to give us some further downside and get back to those pre-COVID highs? Or do we see this push up and actually the market bubble around in this area for the whole of 2023 before it figures out what it's going to do in 2024? You know, there's so many questions really. But they will be a lot clearer in the next 2 weeks as we get through January. It will probably determine what the price action is going to suggest for the year. I think we're probably going to get a relatively choppy, volatile period for the first 6 months, where direction is quite difficult to come by. Don't think inflation has been tamed by any stretch. I think the fact that you've got, you know, Chinese borders opening up at a time where it makes sense to do so in many respects economically because of Chinese New Year. It doesn't say that COVID's gone anywhere. We've still got this situation in Ukraine that's gone. You know, it's gone a bit quiet because people have got used to the fact there's a conflict there, but it's still going on. You know, there's there's issues with there's the kickback of all the policy that hasn't yet played through economic data. You know, there are people at the lower end of the scale that are struggling. You know, and credit, you see credit card debt going higher and higher and higher. So there's going to be some breaking of the system. You see China and Russia kind of using some kind of system to potentially try and take down the dollar. So there's still things that we need to be concerned about, and I don't think that that we will necessarily see that for a few months. We don't see it sort of like fully play out for a few.
Absolutely. We haven't seen. For instance, if you look at the housing, not so much the market, but if you look at the housing as a sector, I suppose you've got, and I don't know what the percentages are, to be frank, but most householders, certainly in Australia, have mortgages.
Yeah.
And lots of them would have locked in fixed interest rates, 2 or 3 years ago. And those interest rates are now going up, 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 up. So as they come off those fixed interest rates, instead of paying like 2% for their mortgage, they're now going to be faced with 5 or 6% for their mortgage, which, if you've got $1 million mortgage, that's serious money. And a lot of people do have $1 million mortgages in this country because the house prices are so ridiculously high. So there's a complete potential for implosion there in terms of mortgage stress. And I can so see that happening if interest rates continue to rise. And even at these levels now, you're going to have people defaulting on their mortgages. What that does, well, intrinsically what it does is allows people who have got deep pockets to buy them up. But worse than that, you've got all these people who are going to be, well, I guess, not paying their mortgages.
Yeah, and I guess the other scary thing is that one of the ways that the central bank and particularly Jerome Powell is attempting to fix the issue is by bringing up unemployment. And that exacerbates the problem even more, because even if you haven't got $1 million mortgage and it's more like 500,000, if you've not got a job, I guess it doesn't really matter how much money is coming out.
You're in deep SH1 too.
Yeah. So we haven't seen that yet. We haven't seen the labour market, but put under the kind of pressure that the central banks really want. And they'll go after it. And this is why this CPI data and the CPI number is so important, because if there's not a significant reduction of inflation without the unemployment situation going higher, then they will continue to go after it, and they will continue to make sure that that there is less hiring going on, and that there is some slack in the labour market, because there just isn't any right now, and it's possible because we're transitioning. It's possible that this particular kind of downturn is very, very different than anything we've seen in the past, and I don't see how the inflation number can jump from 11% right the way back down to 2% in successive prints. So there's going to be some bumps along the way, but so far, mate, it's holding up, and it's interesting to see really sort of like how these things do play out. But I do think that that we're probably headed for closer to settling around the inflation number relatively soon. So today's number is, I think, pretty significant. Yeah.
Yeah, I agree. Anyway, I suppose we better cast speculation aside and have a look at some currency pairs, shall we?
Let's do it.
Let's do that. Where's my little control panel gone? My God, I've got more screens here than
NASA.
Yeah, that'll do. I was going to say,
I've got a joke.
Go on. It's a dead joke.
Said NASA. Yeah, it is a bit. How'd you get a spaceship to go to sleep?
No.
Rocket.
Got nothing. Far out. Yeah, that's a dead joke. Right, we're going to have one dead joke per week on a Thursday. So anybody who wants to contribute one, please feel free.
It's got to be original, though. I have to say that was an original joke, so it's got to be an original. Yeah.
That makes it worse. Okay, where are we? I don't think I went through this before. I've got a short order on Kiwi CAD, and look, I can't believe the CAD is so suppressed. I really can't, and I reckon it's going to explode over 2023. That's just my inner thoughts. Oil's going to have a lot to do with that. I noticed oil's come off the bottom.
Didn't talk about oil, did we?
No. And daily chart suggesting that we've put in a higher low. We are at a resistance level, which makes it a little bit more difficult at present. But that's a pretty strong bar there yesterday. A little bit of a retrace to there would be expected, and maybe take off. That won't hurt the CAD. And if that translates to CAD strength, then where's that chart gone? There it is. That should be obviously the upside down version of this, which is a lower high, which is the bar that I'm trading. We've had 2 inside days since, and that only adds to, I guess, the distance this will travel if it does take off, in my humble opinion. So I think there's a pretty easy TP to be had here. You can either take one there or there. And what happens after that, hopefully, is target level, which is here. The reason that's a target level is because it's pretty strong support. It's been support, resistance through here. It's the backside of the rectangle. Make that a trend line. And I see that as the target. It may take some time to get there, but it's about, what did I say, 300 pips or more, something like that, if we do get into it. So I think it's worth the exercise. So I'll put my entry there, put my stop loss a fair way above it, to be fair. And I think my first take profit is here somewhere. So that's Kiwi versus the CAD. I did speak about 2 things I did during the week. First of them was, and I don't often do this, but I think I'm going to make it pretty much a habit to take one of the weekly game changer bars. And this was the one that I took, primarily because there was a fair distance to travel. So I took pound versus the yen, expecting the first break to go to the monthly pivot. It did not. And as soon as I saw that, I moved my stop to entry straight away. It stayed 2 days above that. And I'm going, maybe I've done the wrong thing here, but today is so far proving that to be the correct thing to do. Now, I haven't given up on this, and I know Ash thinks the pound's junk, and that's fine, and I don't disagree with him. But if I were to get a rejection bar here, it's not going to happen today, but around about this level, then I would look to have another entry on this one, only short term, only at the top of this range. But the yen is probably the story rather than the pound at the moment.
Yeah, agreed.
I'll be watching the yen closer than the pound, I think.
It's interesting, isn't it, the yen? And I guess,
it is.
You know, this is where the markets really do sort of confound in some respects, because we've seen risk on really right across the board. You know, even the crypto market has seen some pretty decent respite. Some of them up 30%. You know, from the lows, and yet the yen continues to actually not only hold its own, but create some pretty significant moves. I mean, that I know we're only on a I know we're on a daily. I mean, look at that daily bar back around about 15 bars or whatever. That's a pretty significant move, you know. So the yen is Japan is creating something right now. It's certainly sort of like creating some support for itself. So the yen I find quite surprising.
Did you read anything into that? And the first thing that comes to my mind is, I wonder, were they right all the way?
What? Who Japan?
Yeah, I wonder, will they ride out inflation by not increasing
well, they
interest
haven't really
rates?
got any. They haven't really got any. You know, that their inflation numbers are closer to 3.5%. You know, so it's not the same issue for them. Their big issue is the fact that they can't allow the currency to go too low. And the way that they've decided to kind of use their monetary policy tools is with yield curve control. So they initially were saying that we're not going to buy we're going to buy bonds. Every time they come onto the market, we're going to buy government treasuries. So we're going to buy your debt, no problem at all. And this is the price that we're going to pay. So if they're going to pay a certain price, then nobody is going to attempt to try and get more for their treasuries, because they're not going to get it. And they've got a buyer. So anytime they want to sell a treasury, they've got a buyer. But what they've now done is they've said, we are going to buy at a higher price. We're not going to buy at this lower price anymore. We're going to buy at the higher price. So they're controlling the yield by switching sort of, what they pay for these government treasuries. And it's fascinating when you sort of think about the different tools that these central banks use. The Fed and the Bank of England and the ECB look relatively blunt when you consider, what the Bank of Japan sort of end up doing. So right
because
or not,
they're less creative. They're following a time-honoured way of dealing with inflation, deflation, rising interest rates, lowering. They're doing it the way it's always been done, where the Japanese are a little bit more creative than that. So
possibly so, mate. I mean, certainly when it comes down to Jerome Powell, he seems to love Paul Volcker and the way that he kind of handled it. But I suppose we do also have to recognise that their economic situation is very, very different, and the fact that Japan haven't got inflation raging. I mean, it's the inflation numbers actually getting to a point where they're probably actually quite happy, because they had nothing for so long. Now all of a sudden they've managed to acquire it. So I guess they don't want to mess around too much, but they need to make sure it doesn't get out of hand. But it's to say they're right at this stage would be to suggest that they've been right for the last 15 years. And I don't think there's enough evidence to suggest that.
Certainly not in their currency strength, no. Anyway, it is interesting, and I think keeping your eye on the yen is something worthwhile, quite frankly. I want to go back to actually pound yen. Told you that I'm out of that. CAD Swiss, we spoke about that earlier, I'm pretty sure, and I did, and I'm really waiting on the pullback for that. So I placed an order today. Yeah, Kiwi CAD, you know about that. Right, let's go to the euro then. Now, my take on the euro, and we pointed this out on Ash's chart actually. If you go back to, sorry, I'll get the chart right. If you go back to a week ago, where we had, my chart looks a little bit different now for some reason. I don't know why. That's weird. That's extremely weird. Anyway, it is what it is. We had a double top sitting here. Actually, it's a great argument. What is a double top? To me, it's the top of a run, no matter what it is. Some people will say it has to be level. Some people will say otherwise. What I say is, if it looks like a double top and it smells like a double top, it's probably a double top. And then you're looking for a lower high, or I'm looking for a lower high to trade it short. That actually happened. And come on, load. And I looked to trade this short on the back of that lower high. I don't know why I can't see it on this chart now. It was as obvious as the day is long. And it's gone. Maybe my charts are playing up. That's weird. Bear with me, guys.
You're all right, mate. Hold on.
Okay. I'm not seeing what I saw before. Anyway, what I
three
saw,
little Indians you were looking at, weren't you?
Now I've got it. It's come back to me. So I've got the double top. In my humble opinion, that's a double top. And then I got a break of the weekly pivot and a retest of the weekly pivot. Now I wasn't trading this week, so I didn't take the entry, but 9 times out of 10, I would have traded that bar short without any fear at all and put my stop loss there. Then came Friday, as I said before, and the numbers didn't work, obviously, for that setup. But this, to me, is still the setup, the double top and the break and retest of that range, if you like, in there. So the emotive move, to me, will not last. It's a temporary situation. Of course, if the CPI figure works in favour of that, then it will be exacerbated and my setup just completely goes away. But if it doesn't, and if it's neutral, as I said, I'll be looking very, very, very keenly on seeing price come back into here, retesting that level. And if it does, then I'm short like a shark on a mackerel very, very quickly. So it's euro dollar short for me. Today, untradable for me today. Two reasons. One is it's already taken away the edge, which of course is the daily pivot test. And we've got that CPI figure coming out in a few hours' time. So this could do anything in the meantime. I would suggest we'll probably stay in that range, which leads me to another point of view, which is, and I'd like to trade this when I have a major number coming up. And I call it, well, it was originally the FOMC breakout, which we used to trade as a break of the range of the previous 3 days. So that would normally happen on a Wednesday. So we've now got 4 days of trading. And if I look, I normally do it on a 4-hour chart. I'm looking for that range for the week. So Monday, Tuesday, Wednesday, Thursday, which is Monday, Tuesday, Wednesday, Thursday. The range is just too big for me, unfortunately, because you've then got to put, there's your high. Where's Monday? That's Monday, Tuesday, that's Monday there. Actually, it's not that bad. That's into Monday, so you're probably there. Let me measure that. It still looks pretty wide to me, to be fair. So 140 pips, which is about 1.5 times ATR. And if I go to the daily chart now and consider if that's even possible, I'm actually okay with it. The problem is we are way, way, way away from where price needs to be. And it needs to be probably in the middle of that range, about DS2. So if price were to be at DS2 at the time of the announcement, and I'll be asleep, so I won't be doing this, right? What I would do is place an order long and an order short and wait for the breakout, cancel the other. It is wide. The range is pretty wide, I've got to say. But because this is a potential reversal here, you're probably looking at down here somewhere as well. So it doesn't look that bad when you look at it in context. To the upside, yeah, well, if it breaks this level, you're probably up here somewhere. So you've still got better than 1-to-1, no matter what. So it's not that bad. I'd consider it if I was awake. I won't be awake, but I'll just go through it again. If you are interested in taking that, you take the range of the week thus far, which is here and here. You look for the midpoint, and you want price to be somewhere in that range. Like between DS1 and DS3, I would imagine, would be okay, as long as price is in that range somewhere. You could place the OCO long and short, stop loss here for the short, stop loss here for the long, and see how you go. So that's the euro. As I said, untradeable today. Other than that, in my humble opinion, as we wait for that news, I want to have a brief look at and what I mentioned from the outset. When I do my weekly analysis, as you know, I look for weekly game changer bars. And here's what's happened this week. We had a bunch of them. Aussie yen was first, and this is what we were speaking about earlier, suggested that we go long on the back of this big bull bar last week. The market took price where it indicated it was going to go, but it's pulled straight back on that. That's Aussie yen. CAD Swiss was next, and this was my trade of the week, or my chart of the week. I won't call it a trade of the week because that's not right. I didn't trade it. If you get a setup, then it's the trade of the week. So far, that's proving to be correct at this point. And I'm desperate now for a pullback, really desperate for a pullback. But that's the exception rather than the rule of these weekly game changer bars this week. And I guess that's why I picked it. I thought that might be the case, because here's what happened with CAD yen, right? Same thing, looking for a long, it would have tipped you in, and now you'd be in a world of pain. And this seems to be the theme with the currencies, where it's not with the indices. And to me, that's a little bit of a mystery, but it is what it is. Swissy yen was next. Exactly the same thing. Suggest you go long, would have tipped you in, and you'd be in a world of pain. The next was Euro CAD, one of my favourites. And I really considered trading this short this morning, to be fair. There'd be no entry at this point on the weekly chart because it's an inside bar at this point. But I am watching this very closely, and it was a toss-up really between this and Kiwi CAD, whether I wanted to trade it short. But I think the best course of action for Euro CAD would be to wait for that to break. And if it does and goes long, happy days, doesn't matter. But if it doesn't, comes back under and retests it, then I'd really be interested in trading it short. But as far as the weekly game changer bar is concerned, no dice yet. There has been no trigger. A few more Euro yen. Euro yen exactly the same as the theme that I'm working on. Would have been taken in. You're not in the world of pain yet because you're still in profit, but you would expect a candle like that to take you to a resistance level. I suppose it did in parts, but it's only a soft resistance level as far as I'm concerned. It needs to be up here somewhere. But then you've still got the three amigos that are waiting to give you the right direction. But the theme's the same. You know, we've been taken in a direction and we've been pulled back from that. Euro dollar, we've been there, don't need to go there again. Pound yen, we've been there, don't need to go there again. Pound US dollar, somewhat, pardon me, same as the rest, suggesting we go long here. You could have gone into that and coming back at you at the moment. Don't know what's going to happen there. Again, that'll be CPI driven, one would think. Kiwis, the Swissy, looking good because the Swissy's so weak. And again, we've seen that play out with CAD Swiss, Pound Swiss, and both looking very, very similar. Kiwi Swiss. Well, actually, I think Kiwi Swiss probably is looking a little bit better than CAD Swiss because it's now put in higher, not a higher low, higher low. This looks to be on its way, actually. So that may have been the one that you wanted. Also, the indication here of an inverted head and shoulders. So if this does reverse, and it's got good grounds to do so, this could be well and truly up here into the 67s or the 68s. So maybe well worth watching as time progresses. If it does reverse, you might want to catch hold of that one, Kiwi Swissy. Then we had Kiwi Yen, which you would expect to be very, very similar, given you've got a risk-on currency versus a risk-off currency, and both of them are the same. But and I suppose to a degree that is the case. Very, very messy, this one. And guess what? Theme's the same. Took you in, you're now coming back at you and putting you into a little bit of pain. Last two, Kiwi dollar and dollar CAD. Kiwi dollar, guess what? Exactly the same thing. Took you in and you'll be in a bit of pain at the moment. And finally, dollar CAD. Exactly the same in the opposite direction. Actually, don't mind this either, but you know, how many times can I trade the CAD? I have to keep it to one, and I chose CAD Swiss. So what does this mean at the end of the... Well, I think it means nothing more than we're in a week of pending news, pending important news, because really, you know, the inflation numbers are, like everything else, going to roll off what the US prints. at the end of the day. So everyone's going to follow suit, I believe. And if the inflation number does actually go down, then I think you're going to see that worldwide. Let's hope so. I don't know. I don't think it's going to move too much, to be frank. And if it does, it'll probably be as forecast by 0.1% or something like that. But, who knows? Anything could happen. So that's kind of where I'm at. That theme seems to be the same. And really what it suggests to me is be very, very careful until that number is printed, because price is going in two directions, right? And it's very, very difficult to catch that unless you've got a very set range, which maybe gold has, because it does have a set range at the moment, and it's been going all week long and goes out, comes back. So bottom to top, top to bottom. And currently that breakout trade from Monday is still sitting there doing nothing. You could do, I don't know if you guys even took any notice of that on Monday, but this is the new pound breakout, right? Or the new London breakout trade. And so far, if you weren't here at the beginning of the show, we've had a neutral result from Monday, would have been a winner on Tuesday, would have been a loser on Wednesday. So it's one up, one down, and one pending at the moment. I haven't set parameters around the take profit of that yet. Maybe we need to do that in the next few days. I'll do that in the next few. I'll do it over the weekend and come back on Monday and give you a set of parameters around the take profit. Maybe we can use that 2.5 to 1 as a starting guide. We'll see. So, mate, that's kind of where I'm at. Don't really want to be trading anything against the dollar unless you're in it free trading at the moment. Happy with the directions that I've got on Kiwi CAD. Happy with the direction that I chose on CAD Swiss and not in. Really looking for a pullback on that, and super keen to trade the euro dollar short.
Sounds good, mate. Sounds good. I think all of those, are obviously dependent on the numbers, and I would certainly suggest that everybody gets relatively clear on what they want to do before those numbers get released. Even if you're trading before the numbers, not a big deal as long as you've got a decent plan in place. But today's not a day for guessing. Not that any day is, but days like today even less so. So try and get your plan in place. Have a really good think about what you want to do and why you want to do it, and just make sure your head's straight before you get into any trades, and just be okay with a loss. Just one day if it doesn't go well, it's not a big deal. But the main key is just get prepared, be prepared, which I'm sure you all are. But we'll be back Monday, mate, as always, just to kind of see what happened and see how this stuff plays out. Interested to see if any of the guys in the room did trade the CPI print and how you guys managed to navigate around it. Of course, if there are any questions at any point, then just post them in or come on camera if you want to come on camera, or just come on mic, and you are always welcome. With nothing else kind of going on right now, mate, we will say goodbye and come back on Monday.
Yeah, look, bit of a slow start to the year. No surprises there. It's often the case. It'll improve, and we'll keep our eye on it. And like I say, I've got about 3 or 4 ideas immediately. If they pan out, they do. And if we can get in the market, more the merrier. Have a good weekend, mate.
Yeah, you too, buddy. You too. Enjoy yourself. Pretty wet over here right now, so it's not going to be much to do outside. So I've got to figure out what we're going to do inside. Maybe get the remote control cars out or something like that. Happy
days. Play darts.
And don't forget your joke next week.
Yeah, come prepared. Be prepared. Thanks, Paul P. Have a good weekend, everyone. Thanks for being our trading buddies, and we will see you on Monday. Bye-bye for now. See you.